everyone. I'm Rosemary Miller here with Mike Belshi, the CEO and founder of BitGo, here to tell us about Bitcoin reaching new all-time highs. Thank you so much for joining me today, Mike.
Great to be here. Thank you.
So, Mike, Bitcoin just reached a new record high of $69,200, surpassing its previous high of $68,990 set in 2021. What's behind the sharp rise this year?
Well, I think it's all the news that we've been building towards over the last, nearly a decade now. The main driver here, of course, is the approval of the ETFs that happened in January. And all of a sudden, there's a distribution channel where people can access direct exposure to Bitcoin, which is larger than any distribution channel we've ever had. And of course, that's the traditional financial markets here in the United States. All of the ETFs have been bringing a tremendous amount of flow. From kind of the folks that have been in this for a long time, and BitGo, we've been doing this since 2013. We like what's going on with Bitcoin in terms of providing an asset that's got a monetary policy that is static and fixed. So you hear about this a lot, that there's a fixed supply, and as more people learn about the advantages of a fixed supply value storage system, they realize, wait a minute, the systems we've been using, dollar denominated or fiat denominated in other countries, has a lot of weaknesses by comparison. And so all of a sudden, everybody's looking at like what's going on at the government, monetary policy level. There's a tremendous amount of uncertainty, and people are like, I don't know what's going to happen with the U.S. dollar. Is it going to remain the reserve currency of the world forever? Well, probably not. Is that going to go in a cycle that's going to harm me? Maybe. I think I ought to have some Bitcoin in my portfolio. And here's the really simple way that retail investors and others can think about it. You can take 2 or 3% of your portfolio today, and you can put it into Bitcoin. And the worst case is that you will be 2 to 3% poorer tomorrow down the line. That's the worst case. And by the way, it's still a bit experimental. There is still risk. There's a lot of volatility. All of those things are true. You should be buyer beware for sure. But the upside potential of it is basically unbounded. So when do you have an opportunity in your lifetime to enter into something that's got that kind of asymmetric downside and upside potential? It just doesn't happen very often. And just to make sure you don't think this is me, a little tiny crypto BitGo company doing this, Fidelity has a group of funds. I think it's called the All-in-One or All-in-One Fund or something like that. They just announced, I think it was last week, that their portfolio recommendation, and they've got kind of three. They got a conservative and a medium and a high risk. The conservative one is a 1% crypto allocation. Medium is 2%. The higher risk is 3%. The only thing I disagree with on their numbers is I think those should be ratcheted to 3 to 5% instead of 1 to 3%. But even the guys that have been doing this for a long time, and remember, Fidelity is the top two asset managers on the planet, and the other one is BlackRock, also major ETF in the Bitcoin space. Their CEO, Larry Fink, is all over digital assets and crypto and looking to move deeper into that space. So anyway, a lot of validation has happened. A lot of regulatory uncertainty has gone away. Distribution channel to millions of people, and frankly, a backdrop where fiscal policy for fiat is really demonstrating the value of why you would want to be participating in Bitcoin.
Well, Mike, we kind of touched on retail investors and the institutional investors. Who's doing the buying right now that is, responsible for this price rise?
It's interesting. You see a lot of speculation out there. I've met with a number of our investors that are traditional financial guys that are all over this. And typically what people say is they're seeing small ticket sizes. What that means is it doesn't look indicative of tremendous amounts of institutional flow. I think the institutional flow is ticking up a little bit, but remember the ETF was approved in January. Institutions move pretty slowly and conservatively. I don't think that anybody was like saying, oh, okay, it's definitely going to approve in January. Instead, they wait to see that happen. They wait to see what the initial fallout, shakeout is of the 11 different ETFs that all get launched. And then they go to their investment committees and they start to push forward after that. So I think the institutions are yet to come. I think this has been largely retail driven. That is, those that are calling up their brokers, and they couldn't do it before. It was too intimidating to get access to Bitcoin, kind of doing it on your own and holding your own keys and things like that. And this is actually very encouraging, I think, for the space because there's a lot of people saying this is the institutional money. I think the institutional money is yet to come.
Well, are there any other factors that can contribute to the price going up, and are there any factors that could make the price go down?
Look, there's a lot of risks. Let's talk about the downside risks, right? This is a relatively new technology. Now, it's not that new. It's been around for 15 years. It's run incredibly resiliently. It's had a constant fiscal policy. It's the only system in the history of mankind which has had an untinkered fiscal policy of any other system, and that's because humans usually like to tweak things. Right? Suddenly, you're making money, and you're like, "Hey, why don't we tweak it to make a little more money?" Um, but Bitcoin doesn't do that. It's very static. So there's a lot of stability of being around for 15 years, but it is still relatively new. Is it possible that we would have a major hiccup somewhere in the technology? I suppose it's possible. There's some threats around quantum technology, which some people are worried about. I think those will be mitigated pretty easily as they come, but you can't fully dismiss it. And then regulatory action. Remember, money is power, and what we're seeing right now is a lot of political forces starting to galvanize and organize against Bitcoin because they see this as a threat to their power. Now, my view of this is that any of these threats are short term. For the long term, I think Bitcoin has staying power. Remember, Bitcoin is the form of money that returns the power to the people, and returning power to the people, we've seen it in history. It can be brutal. It can take time, but in the end of the day, the people win. And this is a system which puts all of us as individuals at the exact same priority as every banking, financial institution, Goldman Sachs, JP Morgan, et cetera. And where do you want to be, when the going gets tough? Do you want to be in control of your own destiny, or do you want to be dependent on those other parties? So there
So,
is risk. Sorry,
well, no
you asked me
worries.
a
Well, Mike,
answer.
we're seeing new all-time highs. I'm kind of wondering, should people have panicked so much when Bitcoin was at what, like 16, 17,000?
Look, there's a lot of education here. This is a different monetary system. So, my own experience, I mean, maybe I learned about Bitcoin earlier, but I'm not some super genius that just like instantly saw this for what it should be. It's a radically different system. We all spend our time thinking so much about the money that we receive in exchange for the hard labor and work that we do. But do we think about the system that's behind it? How does it work? What is the value of money? When I started in the system, there was the major complaint against Bitcoin is that it's backed by nothing. It can't be worth anything. Well, what is fiat backed by? It's also backed by nothing. And if you ask or survey Americans to this day, you will hear a significant portion of them think that somehow money is still backed by gold. That's a fiction. It's just simply not true. Pretty much all of the currencies around the globe are fiat based. Anyway, so it's no surprise that you come out with this thing that's crazy. It's Bitcoin. It was founded by some guy named Satoshi. Nobody knows what he is. There's like mining, and you have to do these, proof of work, which uses a lot of energy. Of course, it takes time to get your head around like what are each of these components and how do they work. But at this point, it's been heavily scrutinized. I'm probably one of the smaller players, like I mentioned. Larry Fink over at BlackRock. Of course, he was slow to the game. Fidelity got into this in like 2016 with Abby Johnson going full in. And of course, down the line, whether you're talking about Paul Tudor Jones or Anthony Scaramucci, like folks that are major financial investment advisors, are all looking at this as saying, okay, this passed the muster of like it's legitimate. And now we can start to think about how does that really impact change from the way the traditional financial system has operated for so long.
And speaking of traditional finance, since now they're kind of in bed with Bitcoin, does that make a difference with Bitcoin's current all-time high? Whereas, we had all these strange players who are kind of out of the way now. Is it different this time?
Well, for sure it is.
Yeah.
These are parties that are highly trusted, in the financial system. Some
Mm-hmm.
would argue that they shouldn't be. I think they deserve a lot of credit for building kind of things to the way they are. Many people put their investments in their hands. So forget about Bitcoin for a moment. I mean, imagine if, I don't know who your broker is. Maybe it's Charles Schwab. Maybe it's TD Ameritrade, whatever. Imagine if you logged into your brokerage account one day and everything said zero.
Yeah.
Could happen. right? But you probably don't think about that very often. But there could be a glitch in the system. There could be a mistake. The broker that you trust 100% with all of your money could just say, oh, nope, we don't have any record of that. Sorry. See you later.
Hmm.
Look, Bitcoin changes this, right? Bitcoin actually makes it so it is transparent. Now, when you buy it through a broker, it's got some of those same issues. But these trusted parties have been working with investors. Of course, if lots of people had zeros showing up unexpectedly in their bank accounts, they wouldn't have a lot of customers. So obviously, they work hard to make sure that that doesn't happen. Having them participate in the ecosystem validates, helps make it so that we can distribute this to more people. As we distribute it to more people, it gets more stable, the volatility goes down. Tremendous number of benefits. Lastly, on the regulatory side, look, this is operating through the approved system of the U.S. government. The SEC established back in the 30s. The main tenets of the SEC were also established in the early 40s. They've been evolving quite a bit. But when you look at how do you manage assets in a safe way for U.S. retail investors, we now have a product which completely fits within those rules.
Well, thank you so much for joining me today, Mike.
Thanks for having me.